Share offerings in April, June suppressed the anomalies we should have seen in May, July. Partially. No, I think they rolled in May and July. Or you mean wait, May and July? In March? There was still a small anomalies occurred during those dates. Hold on, I'll show you. So if I go out here, so there was actually like a smaller anomalies that occurred in those periods. But if the volume is present here during the roll period, then there's less volume here during the anomaly. But if the volume is not present, like here and here during the roll, then the volume comes in the middle when these T35s pile up. Does that make sense? So this has big volume, big volume. And see what happens on these is that we run into the roll date, which means they effectively rolled, right? And then as soon as the roll date hits, they drop the price of the stock, right? Because then they can then margin those futures, like they can leverage those futures contracts and short the stock again. But when we have no volume into the roll date, see how the volumes just it ran up for the ETF and ETN rollover, but not for the futures. So the volume didn't continue up. Then we run here, which is what happened in January. See, I didn't think about this before because I always thought January was just a byproduct of Cohen buying in and, a lot of retail interest. But the fact of the matter is that all of that just accelerated something that was already going to occur on that date. And then we also see that in September back here to a much lesser degree, but no volume into the roll, anomaly, no volume into the roll, anomaly. And the price is the price still went up like 300% here, right? And that's the cycle we're in. So, like, literally 1 year later. What are your thoughts on 442s on the SPY? I just bought some. There's a lot more to it than that, but I feel like that's the easiest way for me to explain it to everyone. Because there's several other things that are occurring there. Like you have active participant fails, which are occurring in a later cycle than market maker fails. And all of those are occurring in a different cycle than short hedge fund fails, right? Because they all have different settlement periods in which they either have to find a locate for synthetics or they have, so it varies per participant, and then it also varies on the type of derivative being used. Between options in ETFs, options on GameStop, and futures contracts as well. But I think what I'm presenting best describes the underlying conditions. I can't afford another January apes. Please sell. No chance in hell, Ken Griffin. Does that put us in mid next week? Yeah, so our the first failure date from the failed roll for this cycle is going to be here on October 13th. Then we have another failure date here on the 21st. And then finally, we have the last one here. And the peak, this is the peak of the fails right here. Thanks, Triple OG. All thanks to like Fluffyosa and Average Joe for making those thumbnails. I've noticed that some have been popping up over in the shit posting, vis-a-vis Trash Dan and Danny or Dan. So I might be using some of those soon as well. Hey, you guys just make cool shit for the stream, so I like to put that up if I can. I mean, you could theoretically, Moon, you could hedge, right, by buying. If you have CCs, you can hedge them by buying calls closer to the money. So if you bought like 180s or something, then you could hedge your covered calls. And then if nothing happens, you can just profit off of both, right? Well, within this window, from this first fail to this last one, right, I expect price action. Now, say we perfectly replicate last September and go up 300%. That still only leaves us at like 500 something. At which point, you know, they can then smash it down as soon as this last fail date is over, right? So maybe they could bring us down back to like 350-ish. And then, you know, maybe we like until we run again here on the 24th. Now, this one I have a lot of confidence in, right? This has occurred every single cycle. This is the ETF ETN cycle. So this is the day they come due. It's occurred every single quarter. You can go back here to August 24th. It occurs. It occurs back here on May 25th. And that's T+2 from the third Friday of that month. If you're trying to locate where that is. And so I think we're just going to see a repeat of that also out here in January. So if we don't MOASS from this, then, you know, we're going to be going into January at a really high floor, ideally. because we're gonna like they're gonna dip us into this, and then we're gonna spike, and if they fail the contract roll again, then they're gonna dip us out to here, and then we run, right? So that's why I think there's good potential here, and just insane potential out here in January. Oh, I gotta delete this. Hold on. And